Good morning, students. I welcome you in our today's session in which we will be discussing income from house property. This would be our second head of income after salary head. So, good morning, namaskar, sat sri akal, swagatam, kem cho, vadakkam. I believe you must be studying very hard to achieve the goal of your life to become chartered accountant as soon as possible. So, in comparison to salary, you will find this head far easy actually because salary was a gigantic head. It was huge, multiple provision, and of course, complex provision also. And when these provisions are going to be asked in a single question, so definitely you have to memorize a lot of concepts and you have to apply in a single question. But in comparison to salary, house property is not that much complicated, not even that much huge, less provision, and basically focused on one thing, that is annual value of house property. And let me tell you, if you are able to find out this single thing, that will be called gross annual value in case of a house property, you would be almost going to solve that question completely correctly. And of course, house property question would be there in the examination. Probability that in every attempt there would be a question of house property, whether individual or as a part of any other head of income. So it is important, of course. And the good thing is you can score full marks in a question of house property and it will not consume your a lot of time also. So let me see. Good morning, Linga. Subha Subhadayam. Good morning, Neeraj. Good morning, Pooja. Good morning, Kalni. Ishwarya, good morning. Shamli, good morning. Satish, good morning. Ajay, good morning. Then Lakshmi, good morning. Shraddha, good morning. Adil, good morning. So, good morning once again to everyone, and let's get started with the thought for the day for today's class. A very scientific thought for today's session, and it calls theory of Pluto. Pluto is a dwarf planet nowadays. Actually, what happens? It was the part of our solar system. But before some year ago, some scientists decided because now it is not in the orbit of that planet system. So now we will not call Pluto as a planet. So they declared it as a dwarf planet. So technically, what happened? Pluto is still doing the same thing. It is still going to continue his path around the sun. So by saying some scientists that now we will not consider it as a planet, it does not affect the Pluto work. Pluto is still doing what it was doing earlier. So that means in your life also, you should behave like Pluto. Whatever your relative, neighbors, if they are saying you won't be able to do this course, etc., you have to ignore it. You have to decide that whether you want to be a chartered accountant or not. So like Pluto, you should ignore each and everyone. Do what you want to do in the best way you can do. So please remember this thing. This is a theory of Pluto. You can refer it also on Google, etc. And when you will read it in detail, you will understand that we should also apply this concept of theory of Pluto in our life. Whatever is your goal, you have to be focused on it. So those do not affect, those do not care, those do not know about your journey. If they'll decided that you can't do this thing, it would or it should not affect your journey of life. So you have to be focused on your path, just like a Pluto. So it's a very interesting theory, and I guess you should go and search in detail. After that, now we are moving on to our today's topic, and that would be income from house property. In illustration 8th, 5th, and 7th point, once discussed with us, Sir Dhanlakshmi is now discussing about salary topic. I have given you so much of time for these kind of queries, Dhanlakshmi. Illustration 8th, 5th, and 7th point, we have discussed, I believe, earlier also, and I've asked you in the problem session also. that student, if there is any issue, then please ask in the problem case, but you did not ask in that session. So today is the house property session. In the next class of house property, I will discuss this illustration of salary also. Kindly let me know in the next class because we need to continue with house property if we would be able to complete it within time. So definitely we are going to discuss your problem also. Now what will happen na, Dhanlakshmi, if I'll take these queries this time, it will actually going to waste a lot of time of students also. Those actually joined for income from house property provisions, and those students, those have already tried these illustration and asked the problem out of it. So that would not be justice with them that you are asking it right now. So I have given you enough time to ask in the earlier sessions. You should actually ask me these illustration at that point of time. It's still not to worry. If we would have spare time, I will discuss this illustration maybe today at the end of the class or maybe in the next session. Okay. Good morning, Mustafa. Yes, exactly. So it was a negative word, but it does not affect Pluto. It does not affected the Pluto, and he or it was doing what exactly it was doing earlier also. So just ignore whatever the other peoples are thinking, what they are talking about you, what negative they are saying about you. You should not get affected. Okay, Golti? Miss Shraddha, sir, please help with how much explanatory notes in the relevant problem is sufficient from exam point of view. Shraddha, we are just doing LVC. And the main purpose of LVC to make you understand the provision in detail. How to write these question, how to explain the question, how to attempt the question, what should be the working note length, etc. That would be discussed in revisionary classes. That would be taken after these LVC. There would be some other strategic classes also for the which would aim actually just for examination purpose. So you should not be worried about examination that how to present our paper in examination. Just try to understand the provision in detail. Before examination, there would be the revisionary class. There would be specific classes which will be focused on that how to write down in the paper. So just wait for that. So we will cross the bridge when it will come. So just whatever is essential is now, understand the provision, write it down, solution in detail. For the prospective of examination, there would be classes which will help you to guide regarding this. Mustafa is saying only salary head is big, other heads are in comparison small and less complex, right, sir? Look, Mustafa, nothing is complicated. And yes, we can say that salary is huge. Not complicated, we can say it's complex. Yes, you exactly saying right, complex. But it is beautiful also. If you have interest in income tax, now you can see the salary head is so interesting, so vast, and so much to understand. House property and income from other source in comparison, not that much complex and huge. But yes, PGBP still to come and it is equivalent huge. And of course, capital gain, that is also equivalent huge and interesting. But just try to generate your interest in the subject or in this course. Then you will find the complex thing easy. Like I have told you in the first class, that Albert Einstein story, that if you will create interest in your studies, you will find things easy. How you can create interest in your study? So whatever is the goal of your life after becoming a CA, we all are doing CA, there must be some object that after becoming a CA, you want to earn money. Somebody wants to travel. Somebody wants to buy a good car. Somebody wants to uh, purchase branded clothes, reputation, etc. So you all must have some dream, and between your dream and you, there is one thing only, and that is these books, these provisions. So you should understand, if I'm able to understand these provision, I can get whatever I desire in my life. So just create interest when you read some provision, then do not take burden of it. Just make sure that if I would be able to understand these provision, these subject, I would get whatever goal I have set for my life. whether it's money, traveling, car, etc., whatever it is, you will get it. So these provisions are technically your dream path. So dream is the goal, your destination, and this is the journey. So these books are not burden. These are the things which is actually taking you from there to that point of goal. So you should create interest that okay, this is the way I can make my dream true. So these are not burdens. These are actually going to support you to complete your journey of studies. Okay. Mustafa is saying, I am currently in chapter 2. I am writing illustration and test your knowledge. The move to salary after it, so it will be easy for me. Yes, definitely. If you are working hard, then definitely you will feel everything easier after revision. So if you have gone through the revision of salary or any chapter, chapter 1, chapter 2, now you are finding those chapter easier in comparison to earlier. And if after two revision, definitely you would be able to understand each provision very clearly. As I always say, revise twice. That's my advice to make you wise. Saipa is saying good morning. Good morning, Saipa. Mustafa, you basically learn with fun. Yes, if you'll take burden, it won't help. It will make things more complicated. So just understand that these are not books. These are money. These are my traveling dreams. These are my car dreams. So whenever you take a book, just understand these are not books. These are my future car. This is my future money. This is my foreign traveling. This is my branded clothes, etc. This is my reputation, etc. Galti is saying, I'm planning to practice CA final question, sir. Will this really work out? No, it won't really work out. So please do not focus on it. I advise you, please stick on illustration, which is relevant for CA intermediate. Mr. Linga is saying, salary income is real life scenario which help to resolve problem in computation to pay tax. Really very interesting. Yes, it is interesting. Everything is interesting if that is going to come true, the goal of your life. Kuldeep is saying, yes, sir, it is very interesting. Conceptual clarity is fundamental. Very true. Chalo. Moving on to our second head of income, and that is income under the head house property. So technically, from a house, you can earn directly income and indirectly also. So practically, we'll talk about a house or a building. There could be incomes, direct way or indirect way. A house can help you earning income in an indirect way also, and it can help you earn income directly also. So technically, directly we can earn income from a house. There would be a regular way of earning income. The regular way is by let it out. So we will get the rental value. There is a direct way of income is one-time income. How can we earn a income from a house? One-time income. So I'm talking about the sale. If we sell that property or that house, so we can have one-time income, and that is called capital gain. In terms of income tax, we call it capital income, which is capital gain. The indirect income, that means the house can also help you to earn some income in an indirect way. Suppose you are carrying a business. So your house may be utilized as factory, warehouse, office, etc. So technically you are not earning from this directly. But of course, with the help of factory, warehouse and office, that is actually helping you to earn income from that business. So that is indirect help of income. So if you are using any house in the business, then the profit of that business is going to be taxed under PGBP head, not under income from house property, even The house property is having substantial help in earning that income, but the main income would be from sale of any product, providing of any services. So that would be deciding factor whether that income is going to be included in which head. So that would be taxed under PGBP, profit and gain of business and profession. If you are having an income from house and that is a direct way of income, there could be two possibilities, regular and one time. So one-time income is going to be taxed under capital gain income. And the regular income, that is which we are going to discuss, that would be the part of income from house property. So first of all, you should understand that if there is a house, there could be two or three possibility of earning income, direct as well as indirect. So regarding which kind of income we are discussing the provision under income from house property, that is regarding the rental value income, the regular income, the annual value. The annual value means the income which will arise annually. If we sell a property, then technically the income is not going to be arise annually. That is would be one-time income. So you got it? What provision, what kind of concept regarding which kind of income we are going to discuss under income from house property? That would be the annual value. So we have to find the annual value for the purpose of taxability, and that would be the case of regular income from a house. There are basically three basic concepts to tax this income under income from house property. The charging section is section 22, and it summarizes that these are basic three conditions that should be fulfilled to tax any income under the head income from house property. The first condition, there should be a building. Building could be a house, building could be a warehouse, building could be a factory, building could be an office. So if I will let out any office, it will not fall under PGBP because business would be utilized when I am using any office for business purpose. Suppose I am having a factory and I am going to let it out to someone else. Then what I actually let it out, there was a building. So factory, warehouse, office, house, all these are technically called building. So if there is a building and the person who is receiving the rent, the assessee we can say, the person who is receiving the rent is the owner of that building or he is a deemed owner. So we are discussing when any income would be taxed under income from house property, as we discussed under salary topic. Salary charging section was 15, and it says any income would be taxed under the head salary if there is a relationship of employee and employer. If this condition fulfilled, then that payment will fall under the head salary. It could be basic salary, it could be allowances, it could be perquisite, it could be compensation, whatever it is. But that payment would be taxed under the head salary. In the same way, charging section 22 of house property says there should be a building, first condition. The person who is receiving the rent, the assessee, either should be the owner and deemed owner. What is the meaning of deemed owner? That we will discuss under income from house property. And third condition, it should not be used. That building should not be used. Should not used for own business or profession. Suppose if I am having a building and I am using that building as my office, as my factory, as my own factory, office, warehouse, then it would not be the part of income from house property. Why? Because the treatment would be under PGBP head. Because we are earning directly not income any from that property, we are earning indirect income from that property. So we can claim depreciation on it, etc. So if any building has been used for your own purpose, that would not form part of income from house property. So there must be a building. The person who is owner or should be deemed owner, and that building should not be used for your own business. You can let it out for anyone else, for his factory, etc. So he or she will pay you a rent. Then that would be the income under the head house property. So we are going to discuss these provision in detail one by one. So basic idea you understand? What would be the taxable income under the head income from house property? Charging section 22. What we just discussed, it is going to discuss in detail over here. Let me see if there is any query. Yes, it is easy chapter Nagaraja in comparison to other heads of income. Chalo, moving on. The process of computation of income under the head income from house property start with the determination of annual value of the property. The concept of annual value and the method of determination is laid down in section 23. So our section is only from section 22 to 27 under income from house property. The annual value of any property comprising of building or land appertaining thereto. We can call it a building or a land on which construction has been done. So it calls land appertaining thereto, of which the assessee is the owner. Abhi it is just saying owner, but deemed owner concept will come. Is chargeable to tax under the head income from house property. So exactly same thing. It's explaining what we have just discussed. Now exception. Annual value of the following properties. Now this is interesting. Properties are chargeable under the head PGBP, but there are certain cases in which the annual value of the property is going to be taxed under PGBP head. Portion of property occupied by the assessee for the purpose of any business or profession carried on by him. So we have discussed it. If any building or any portion of a building has been used by assessee for himself, whether it's your office, your factory, your go down, whatever it is, if any part of the building or any building has been utilized for your business, then that part would not fall or that building would not fall under income from house property. Clear? Second, commercial property is of an assessee engaged in the business of letting out of property. Suppose if this is my business practice that I construct commercial complexes, I do not sell them. I only let them out. That is my nature of activity. So if any person who is engaged in this activity, his main activity, primary activity is to let out commercial buildings. So because if it is your practice, if it is your frequent activity, then this would be taxed under PGBP, not under income from house property. So if I am having a house and I am letting it out, the rent would be income from house property. But this is if my nature of activities. What is my primary activities? I let out commercial buildings. I construct commercial complexes, commercial buildings. I do not sell them. If I'll sell them, that would be my stock in trade. The main activity of my business is letting them it out. Then it would not fall under income from house property. It would fall under PGBP. So it is pertinent to note that any income from letting out of residential house or part thereof by the assessee being owner would be the part of income from house property. Annual value is the amount for which the property might reasonably be expected to let from year to year. So what is annual value? We will discuss it in detail. Conditions of chargeability. Property should consist of any building or land appertaining thereto. So initially what we have discussed under charging section 22, there must be a building, you should be an owner or deemed owner, and it should not be used for business purpose. Actually, we are actually discussing those 3 points in detail. Same thing would be repetitive again and again. So what is the meaning of building? Now they are explaining what is the meaning of building. So if there is any land on which construction has been done, that would be treated as building, whether it's office, factory, warehouse, does not matter. Building includes not only residential building, but of course, Also, factory buildings, office, shops go down. So if there is any land on which construction has been done, that would be building. Land appertainent means land connected with the building like gardens, garage, etc. It may be noted that income from letting out of vacant land, if the only vacant land has been let out, there is no construction on it, then it would not form part of income from house property because there must be a building. Is however taxable under the head income from other source or PGBP as the case may be. So suppose if there is a vacant land and I am going to let it out. So the rent of that vacant land either would fall under PGBP or income from other source. When it will form under PGBP, if this is my main activity, this is my common activity, this is my general activity, that I do purchase land and let it out. So if this is frequent in nature, that would be treated as my business income. If it is frequent, this is not my primary activity, then it would tax under income from other sources. Assessee may be the must be the owner or deemed owner. So you can see the owner word is over here and the D point say deemed owner also included. So what is the meaning of owner? The owner is the person who entitled to receive income from the property. The requirement of registration of the sale deed is not mandatory. Ownership includes both freehold, leasehold. Owner includes deemed owner. So main concept, either you should be the owner, registered owner. Registry must be in your name. But there are certain cases in which even without registry in your name, you would be treated as owner. That would be the case of deemed owner. We will discuss it. The person who owns the building need also not also be the owner of the land upon which it is stands. Exactly. So this is general definition of the owner. You can go through it, you can read it, and we will discuss it if there would be any problem in the next session. So this is very basic point. Use of the property. The property may be used for any purpose, whether you can let it out for commercial purpose, residential purpose, whatever. But it should not be used by the owner for the purpose of his business or profession. So that's exactly we have discussed. So you might be feeling the same thing we are discussing again and again. So the same thing is explained to you again and again in detail. So there would not be any confusion. So this point we have already discussed. This is new point. Suppose if property held as stock in trade. Suppose I'm a builder. So we are talking about builder. In case of builder, the buildings, the apartments, the flat, the villas, what he is actually selling to the investor or the buyer would be stock in trade in his hand. So in case of builder, there would be an interesting situation. Suppose a builder has constructed some flats. So these all flats technically his stock in trade. Clear? So all these flats are stock in trade. So when he sell these flats, the income of these flats would be taxed under which head? If these flats are his stock in trade, the income of these flat at the time of sale would be taxed in which head of income? So Dhanlakshmi is saying PGBP. Let me see. Adil is saying PGBP. Mustafa is saying PGBP. What if he entered into lease agreement, charged 10 years money of lease, sir? So lease agreement is a rental agreement or it's a transfer of ownership that we need to see. If the ownership has been transferred, then it would be technically a sale agreement. If ownership not transferred, then it would be a rental case. So after deemed owner definition, the lease point is there also. So after deemed owner definition, maybe you would understand what exactly you want to know. So it would be PGBP, correct? Mustafa sir, please on everyone so you can visit all at once. Do not worry. PGBP, of course. Shraddha is saying PGBP, absolutely correct. Yusami is saying PGBP. Ajay is saying PGBP. Shamli is saying PGBP. Ishwara is saying PGBP. Shalini again said PGBP. Neeraj is saying PGBP. Well done. Navneet is saying PGBP. So if there is stock in trade, Hina is also give the correct answer. PGBP. Hiram also saying PGBP. Disha is saying PGBP. Prerna is saying PGBT. PGBP Prerna. Nagaraja is of course PGBP. Rihiya is saying PGBP. Saipa is saying income from house property. Very bad. Very bad, Saipa. Not the correct answer. It would be PGBP because if there is stock in trade, then any income which is actually generating on stock in trade would be always PGBP. So also, so stock in trade income would be taxed under PGBP head. Clear? But suppose out of these some flats, there are some flats, the builder says these flats actually nobody is going to purchase till now. So why should not I actually let out these properties? Suppose some flats has been let out. So stock in trade has been let out. So if your stock in trade, which are actually buildings, if let out, then the value would be taxed under income from house property. Because the condition would be fulfilled. First is there must be a building. Second is you should be the owner or deemed owner as the builder condition satisfy one, satisfy two. And these buildings should not be used for your office, your factory, your warehouse. So technically you let it out. So this is not used for your own business. So all three conditions fulfilled. So income would be taxed under income from house property. So if builder let out his stock in trade, then income would be taxed under income from house property. If he sell those properties, income would be taxed under PGBP head. Understand? Now there is a new condition also what we should understand. If property remain vacant, some flats let out. So if let it out, it would be taxed under income from house property. If sold, it would be taxed under PGBP. If some property has not been sold, not been let out, it remains vacant. So government says that we will give you 2 years time. Till 2 years, the vacant flat will not be going to tax. We will treat their value as nil. After 2 years, if any flat has remained vacant, we will assume it as deemed let out. It is not actually let out, but after 2 years, we will assume it as deemed let out. Now, what is deemed let out? We will assume that if it would have been let out, then what rent you is actually going to receive. And we will take tax on that deemed let out rent, which is not real. So this deemed let out rent needs to be taxed. How it's going to be taxed, that we will see in the numerical part. But it would be regarded as deemed let out. 2 years means the year in which the flat construction has been completed. Suppose the construction of the flat has been completed on 10th July 2025. So it says 2 years from the end of the financial year. 2 years from the end of the financial year, construction completed. So construction has been completed on 10th July 2025. So first of all, need to reach at the end of the financial year. So this would be the end of this year financial year. So from this date up to 2 years, there would not be any taxability. That means till 31st March 27 and 31st March 28. For these 2 years, there would be no taxability. Of course, not in this year also. So the year in which your house would complete, no taxability. And for next 2 years, you will get the benefit of no taxability. The deemed let out concept would be applicable from 31st March 29. That means 28, 29. From this year, you have to pay tax if you are not able to sell that property or you are not able to actually let it out. So in case of builder, there would be three circumstances. If stock sold, PGBP, property let out, income from house property. Even if not let out, then in the year in which construction completed, that year you not need to pay any tax. And 2 more years, you need not to pay any tax. And after that, your property would be considered as deemed let out and you have to pay tax on it. This is explained by these provision. Annual value of house property will be charged under the head income from house property where it is held by assessee as stock in trade. However, the annual value of property being held as stock in trade would be treated as nil. When it would be nil, when it is not being let out. If it is let out, then it would be taxed from the year you let it out. For a period of 2 years, from the end of the financial year in which the certificate of completion of construction of the property is obtained from the competent authority. If such property is not let out during such period. So, in the year construction completed, at that year, no taxability, and for next 2 year, no taxability. After that, property would be treated as deemed let out. Clear? Now, where the assessee is a builder, construction company, the house property would be held as stock in trade and rental income would be income from house property. If assessee is engaged in the business of, now if the business is just letting out commercial properties, in case of builder, the business is not, the main primary object of the business is not letting it out. The primary object is to sell. But if it is not going to sell for some time, then we can let it out. But suppose there is a businessman whose just business is to construct commercial properties and he has no intention to sell. He has no intention to transfer the ownership. He just one business activity is just to make these property to let it out for commercial etc. purpose. Then the let out receive rent would be his business income. Then house property concept will not be applicable. So this is important point. If the main activity, the engagement of letting out of commercial property, income therefrom would be accessible under the head PGBP and house property concept will not be applicable. So we are just discussing the basic concept of house property. We are just understanding that what kind of income needs to include under this head of income. Deemed to be let out, sir, in that case, it will chargeable under income from house property. Yes, Galti, if property assume as deemed to let out, that would be taxed under income from house property. Detailed concept of deemed let out we'll discuss in this chapter only. Harivansh is asking, let it out means. Let it out means, Harivansh, किराए पे देना, let out करना, किराए पर देना किसी चीज को. Okay, let it out. But sir, it is commercial property, then to it is taxed under income from house property. Yes, a specific provision has been made that if it is a stock in trade, the main activity is to sell. And if it is not sale, but let it out for some time period, it would taxed as income from house property. But if your main business is just to letting it out the property, in practically maybe you have seen this cases or not, there must be some shopping complex nearby your house or maybe you have seen those And if you'll go and talk to the owner of that complex, he will say, I will not sell the properties of this complex. I will not sell as a shop. You can take the shop in this property, but only on rental basis. We will not sell these shops. So in that case, the rental income would be fall under PGBP head. Understand? Some this is suppose in some kind of mall. If the main activity of that mall owner is this, that we will just let it out to you the shop, but we will not sell this shop. So in that situation, that would be the case of PGBP in all cases of renting of that property. Yes, it's a mall, like mall, but if it depends upon what kind of contract, what kind of activity that mall owner is doing. If he's ready to sell property as well as on rent, then that's a different concept. But if the only purpose of that mall owner is just to let it out shops, not going to sell it, then the property let it out income or rental income would be PGBP income. So it will depend upon the fact of the cases. Mustafa is saying if Airbnb online service where some owners get rent their house for 2-3 days for use, so it is PGBP or other sources, it would be PGBP because intention is just to give that property on rent. So if intention is only to let it out any property on rent, that would be always PGBP. Golti is saying, sir, I am confused like business of letting of house property will be charged under PGBP. And again, Act is deviating to income from house property when the stock in trade is vacant 2 years. Could you please clarify? There is no confusion technically. First of all, you have to check whether buildings are stock in trade or not. Okay. Or let me tell you, maybe you are not properly understood the meaning of stock in trade yet. Do you understand, Galti Anil, what is the meaning of stock in trade? When we treat anything as stock in trade, do you understand that? If we want to sell it, if my purpose, my intention to sell something, that would be my stock in trade. So a builder intention of property is what? Is to sell. That's why builder properties, flat, houses are stock. And if because there is no buyer, for some time he is just letting it out. Intention is not letting it out. Intention is to sell. But because we just want to let it out because there is no buyer to purchase. So in that case, it would be house property income because main intention is to sell. But if I am engaged in the activity of just letting it out my properties, so now my properties are not my stock because my intention is not to sell. And when that is not my stock in trade, then the properties would be my asset because I'm not going to sell. And if these building is my asset, that would always be taxed under PGBP because your intention is just to earn the income from those property, not to sell them. So intention or the case fact is important. So in case of builder, if your intention is to sell, then property income would be house property. If there is no intention to sell, then it would be commercial activity would be my business income. Understood? Now I have cleared it, of course. Okay, Shraddha is saying clear. Okay. Miss Hina is saying, then sir, if a shop is given on rent, then it will come under house property. Yes. If it is not my main activity, if I am having a shop, I think okay, just let it out. Then it would be my income from house property. But if my business is this, that I have construct or purchased lot of shops and I not going to sell them, my activity is this, that I am going to just let it out on rent, then that is my business activity. It would be under income from PGBP. And let me tell you one thing that would be given in question clearly that assessee is engaging in letting out of properties income. That would be business income. And it would be given that assessee in the stock in trade of business, then letting out income, that would be house property. It would be in the question clearly. So do not get confused. Aditya is saying why a housing loan must be taken on 25 lakh or 2 lakh. What? Aditya, are we discussing this point right now? What kind of question is this, student? Please ask your question which is relevant for what we are discussing right now. So only the sale properties let it out is tax, right, sir? Yes, you can say that. Miss Meenu is saying purpose is to sell is PGBP, not intention to sell is business income. If no buyer to purchase and interest to sale, then house property. Exactly. You do not want to worry about it. That would be given in question. And if you want to understand as per logic, you have to see whether these houses are his stock in trade or asset. If stock in trade, let it out, income from house property. If the main activity is to, these are the asset and the main activity is just to let it out and earn income, it would be under PGBP. Ishwarya is saying we have property in which we are letting it out for both commercial and residential purpose. So it is PGBP. What kind of question is this? If I am having a property and if I am letting it out for commercial as well as for residential purpose, so I am getting rent in both cases. That would be my income from house property. Why it is PGBP? How it is possible? Either though I have only this activity that I have multiple houses, I am actually just renting it out. My activity is just to letting it out. Then it would be PGBP. Yes, Shraddha is right. If the assessee has a number of houses, say row houses, and he is letting them out, then it will be under income from house property. If this is his main activity, his main activity is to letting it out. This is his primary income, that frequent income, that it would be treated as business income if he has two or three properties, and if he let it out generally, then it would not be its business, it would be house property. So it will depend upon your frequency of transaction. Let me tell you, if you purchase some share today, some share after 10 days, then after 15 days. So if you are dealing in shares like this, you are not purchasing it regularly, then shares would be your asset. If your main activity is to purchase and sell shares every day, then we can say that it could be your business activity. So there are some cases we do not have any specific rule. It will depend upon the situation, on the fact of the cases. And let me tell you once again, that would be given in the question. If you are engaged in the business of letting it out, you are not seeing this definition, student, engaged in the business of letting it out. So if the term utilized business of letting them out, it would be your business income. If this is not your main activity and you are getting rental income due to stock and trade, not sale, then it would be your house property income. It is as simple as that. Students, you are making it complicated without any reason. It is very simple. If the assessee is engaged in the business of letting out, then PGBP. Else it would be house property. So is it this simple? Sometimes because we are studying in CA intermediate and we have just overcome from the salary topic, a huge and difficult topic. So our brain may be not ready to understand simple thing. He's not ready. He's not getting it. Okay, this is so simple. This is just, you are just trying to make it complicated without reason and you are getting confused yourself. There is nothing to confuse. Very simple. If you're stock and trade, income from house property. If this is your engaged in the business of letting out, then it would be your business income. Nothing to get confused. Just be simple. Make things normal. There is no confusion in it. You are just making it complicated yourself. Now, again, this quality analysis with a specific new situations. Sir, what if the builder has not let out any property? Sir, then can we avoid this deeming provision after 2 years? We cannot avoid this. After 2 years, it would be automatically become deemed let out. We cannot change law. We have to follow it. Nagaraj is saying, sir, attached property let out for business purpose, it would be income from house property. Again, it is exactly happening same thing. We are just discussing theoretical provision for a numerical topic. What would be the treatment in numerical? You have to wait. We will discuss the numerical topic. We are just on the definition. So we just going through the definition. Just stay with me. You will understand each and everything. How to tax which concept. Just relax. Harivansh is asking up to one or two building putting on rent is treated as income from house property. And up to more than two building, no, it is not right. There is no number has been defined, Harivansh. It would be, why you are not getting, student? It would be written in the question. If that is your business, your primary business is just letting out properties, then it would be PGBP. Whether it's two, three, four, five house, but you are not primary business, then it would be your income from house property. Wait for the numerical part. Everyone just have patience. Have patience. Relax. I'm again saying you are thinking so much. You are doing overthinking. Not required in this case. Okay, so this is main concept. Just summarize. I all summarize all the points in three words. The annual value of a property is taxed under house property if following condition fulfill. There should be a building. Vacant plot is not as building. Its income does not falls under income from house property. Assessee should be owner, deemed owner. Property should not be used by the owner for his business or his profession. Now there's a concept of composite rent. Composite rent means combined, mixed. So there are certain cases you must have seen when you are going to take a property in a rent in any complex, in any commercial apartments, building, any society. So what generally happens, there would be two situations. Suppose the building rent, the flat you have taken on rent, the rent of the building, suppose is 20,000 and the society charges for facilities, for gardener, watchman, security system, or inverter facility, swimming pool, health club, etc. So there could be some society charges, suppose 4,000 rupees. Now, if you are going to pay 24,000 and the value of the building rental and the society charges has been given separately. In that case, the building rent would be taxed under only income from house property. And the society charge is going to be taxed under income from other source or PGBP, depend upon the fact of the case. Again, you will ask, when PGBP, when income from other source, there is an explanation. Just relax. Again, if this is not your commercial activity, then that would be income from other source. If I am having this work that I have multiple properties engaged in letting it out business, then these society charges would be PGBP. So that would be given in the question that it is your business activity or it is your not business activity. But there could be a cases. Now this is called composite rent. So in case of composite rent, if the separate charges for building and the rental charges for other amenities, facilities, etc. has been given separately, then we will only take income from house property, the building rental value. But there could be a situation where it has been mentioned that composite rent is 28,000 and bifurcation has not been given. Then what will happen? This whole value is going to be taxed either under income from other source or income from PGBP. Nothing is going to be taxed under income from house property. Now again, this is that simple. Either composite rent separate value would be given, building rent will tax house property, other would be other source PGBP. Not given, then full value under other source and PGBP. Now again, if you have confused when other source, when PGBP, it would be given in question that the person, the landlord, is it his main engaged activity, then PGBP. If it has not been given that it is his primary activity, then income from other source. As simple as that. So do not get confused. So these are the provision for composite rent. Meaning of composite rent, we have discussed, you can read it out. Tax treatment we have to understand, where composite rent includes rent of building and charges for different services. So the sum attributable, if it is separable, if the information has been given separate, then the property value would be taxed as income from house property. And the services would be taxable as business income or income from other source. So what I have explained to you in just 1 minute, the detail has been given over here, and you do not need to think a lot. Whatever has been specifically given in question, why to bother about it? If let out building and other asset are inseparable, so what would be the outcome? Either it's going to be taxed whole value under PGBP or income from other source, as the case may be. If separable, that would be house property, other would be PGBP or income from other source, and the provision itself says, as the case may be. If the main activity of landlord is to let it out properties, then it would be PGBP. If this is not main activity, then other society charges income would be taxed as income from other source. Clear? Not separable, inseparable, then the full value would be either as business income or income from other source. So this chapter is easy. The problem is that we have, because after completion of salary, we have discussing this chapter. So easy thing would not be go into your mind that easily. Your brain will process it with complications, with complex. Okay, this would be happen, then what? This chapter has nothing in front of salary topic. These are basic things, and we are discussing just theoretical provision. You will understand these provisions of, like we have discussed, the deem let out, the PGBP income, other source, when we will go through with the numerical topic of this chapter. After example, you will see, okay, this was that simple. I was asking multiple questions on the day one, and those questions do not exist technically. So the solution, when we will go through with the numerical part, you will understand that there is nothing complicated under income from house property. Okay. So now the concept is moving on. The concept say, suppose if the property is situated outside India, then what would be the tax treatment? And again, this is not a new topic. We have already discussed it in chapter number 2, residential status and incidence of tax. So either you would be a resident and ordinary resident, or you would be a resident and not ordinary resident, and you would be a non-resident. Clear? So if your house property is outside India, then the treatment would be exactly same. If you are a resident and ordinary resident, that property rental income is going to be taxed in India also, because for resident, all income, whether he received in India or is in India, outside India, does not matter, going to be taxed here. If you are a resident and not ordinary resident or a non-resident, then this house property income would be taxed in India if it is arise or deemed to arise or deemed to received in India. So exactly this concept is going to be discussed over here. We have already discussed this concept earlier. In case of a resident in India, resident and ordinary resident. In case of individual HUF, income from house property situated outside India is taxable, whether such income is brought into India or not. In case of non-resident or resident but not ordinary resident, income from a property situated outside India is taxable only if it is received in India. So if it has been received in India, that is going to be taxed as per the normal provision, as per this chapter. Whatever would be the treatment of a property, if it is in India, exactly would be the treatment of property outside India if you are a resident and ordinary resident, and the same treatment even if you are a RNOR or NR, but if the rent has been received in India. Suppose if you are a non-resident, you are having a property outside India, receiving the rent outside India, then what would happen? No treatment in India. So there are certain clarifications, some important notification. If the property is held as stock in trade, then rental income will fall under income from house property. We have discussed this point. Example also there. In case of composite rent, if such rent can be split up into two parts, house property alag and other for other amenities, then house property charges would be taxed under income from house property and remaining would be under income from other source or PGBP as the income from other source. If such rent is not separable, then the whole of such rent would be under PGBP or income from other source. Add PGBP also where students. So the detail has been discussed above. These are just the summarized provision. Now this is very interesting point. The third point is utmost interesting. Income from house property. Now we are discussing income tax act. So there would be some income to taxed. So if there is no income, there should be income tax or not. Suppose many of you are not earning any income. You are still students and you are going through with your studies. So you are not earning any income. So is income tax is applicable upon you? Can we charge tax from you? The answer would be no. So income tax would be applicable when there is income, whether it's salary had, PGBP had, etc. But income from house property, there are two specific situations. Under income from house property, there are two specific situations in which there could be tax even without no real income. The point is no real income. So you need to pay tax on notional basis. Notional basis means assumption basis. Without having real income, without having real money, you may need to pay tax under income from house property in two situations. That what would be the case? Let me show you. This is important. And again, the numerical topic regarding this point we will discuss later. Now what it says, you can see, suppose there is Mr. A. He is having three houses. And all three houses has been utilized by him. No let out. This has been self-occupied. This has been vacant. This has been vacant. So two houses are vacant, not let out, no business activity. And one house has been self-occupied by him for his residence with his family. And you maybe must have seen these kind of persons in your life. Maybe you know some relative of you, maybe some neighbor, maybe some friend relative, etc., who is having multiple houses. And those houses either vacant or used by him for self-occupying. So what income tax has been said that out of your house properties, all house properties, those has been self-occupied or either vacant. Out of these three properties, two would remain exempt. That means two value we will take as nil value, as there is no real income. And practically you can see there is no real income out of all three. Actually, Mr. A is not earning any income from any of these properties, not even directly, not even indirectly, not using for business, not let out. So technically, Mr. A does not earn any income from these three properties, no real income. So technically, there is no real income from three houses. Clear? But income tax say no. We will assume only there is two house property income is nil. Matlab we will take only two houses income as two houses have no real income. So practically, we do not have any income out of these three houses, but income tax, we will only exempt or we will only consider two houses value is nil. If you have more than two houses for self-occupied or vacant, then the remaining, other than those two houses of your choice, the remaining houses we will assume as deemed let out. So two houses taxability is zero because there is no real income. But practically there is no real income from third also. But department say no, we will only give you two houses benefit because the reason is this: you are having multiple houses just for self-occupied and vacant. You should let it out. So somebody else will get a house. Like in our country, there are three basic requirements of survival: roti, kapda, and makan. Matlab food, clothes, and shelter. And you are a single person having three houses for vacant or for your residence. So that's a loss to someone else. If you would have let it out properties, somebody else would have received the shelter. And you must be receiving some income. So you're doing it okay, but we need to charge tax on it. So as we say, no, more rich, more tax. Income tax is a progressive tax structure. So you can see Mr. is a very rich man. He's having three houses. And still he's having three houses. He's having two houses vacant. He is not even let it out these property. The department said it's very wrong. We are a developing country. So we need taxes for the purpose of development. And if you are having more than two houses, then for two houses, we will not charge anything. But if anything, any other houses more than these two houses, which is not let out, not used for business, we will assume it as deemed let out. Deemed let out meaning if it would have been let out, then what is the market rent? We will find out the market rent. We called it in income from house properties fair rent. So there is a term in income tax under income from house property, fair rent. So what is the fair rent? That means the market rental value. So what would have been the market rent if you let it out as property? Suppose the market rent would be 2 lakh rupees. So you can see Mr. A does not have practically any income from these houses in real. The real income is zero. But you have to pay tax assuming 2 lakh rupees your income. So that is called income on notional basis, assumption basis, deemed basis. This is called notional income. The same way would be happen in case of builder. The builder is not going to pay tax on his flats which has not been sold up to 2 financial year from the year in which construction certificate has been obtained. So after 2 years, it would assume as deemed let out. That is also a case. So whenever your property is assuming as deemed let out, technically you have to pay tax without having real income. So the first situation, whenever your properties will be regarded as deemed let out, in all those cases, you have to pay tax on notional basis without having real income. Understood? The first case, when you need to pay tax on notional basis under income from house property if you are having any property which has been considered as deemed let out. The numerical provision we will discuss about these two, annual value nil, etc. We are just discussing the way or the cases in which you have to pay tax under income from house property without having real income. The second case. Suppose you are having a house property, you are having three house property. Again, this is self-occupied, this is also self-occupied, this is also self-occupied. For some months you reside in this, for some month you reside in this, for some month you reside in this, or you reside in this, your family member, your children maybe reside or occupied these properties. So again, what income tax will do? Income tax will assume two properties value as nil. And we know that income tax will assume that property as deemed let out. So what we think, let's do one thing. we will let it out this property for only 50,000 rupees per annum. We will show the rent of this property 50,000 rupees per month, per annum, and we will let it out to someone else. So income tax say no. This is your actual rent, but actual rent can be manipulated. People can show the actual rent lower to actually, uh, we can say, avoid taxes. So income tax say actual rent is irrelevant. It was self-occupied, but you just let it out at a lower rent to save your tax liability. So income tax say no, we will not take that actual rent. We will compare it with the market rent, which is fair rent. And suppose the fair rent is 3 lakh rupees. So higher is going to be taxed. Suppose in real we are actually let it out this property for 50,000 per annum to our relative. We were self-occupied these two properties. Third property, our relative come to us and he asked that I need a property on rent. And market rent was 3 lakh. But we say, no, okay, chalo, we will take 50,000 from you. You are our relative, nephew, niece, anyone. And we actually realizing income 50,000. This is my real income. There could be manipulation also, but suppose this is the real case, genuine case. There could be cases when suppose someone I know comes to ask to let it out any property of me, then of course I will charge less value if he or she is my relative. So technically we are actually receiving 50,000 rupees per annum, but income tax say no. We will charge the higher. In numerical, we will discuss this, that the concept is higher. So even you are receiving only 50,000, you need to pay tax on 3 lakh. So 2,50,000 the difference. It is actually taxed on notional basis. Even when you are in real receiving only 50,000. You are not faking it. You are not avoiding tax, but there could be a practical possibility that we will let it out our property to our known ones, our friends at a lesser value. But income tax will say no, the higher needs to be taxed. So in this case, you can see the higher is 3 lakhs. So actually we are receiving 50,000, but we have to pay tax on 3 lakhs. So the 2,50,000 would be the case in which you have to pay tax on notional basis. So under house property, there would be two situations when you need to pay tax on notional basis. One is in case of deemed let out. And the second one, when your actual rent is lower than fair rent. So if your fair rent is higher, of course, you have to pay tax on tax, extra income. Clear, students? Hina is saying these two property exemption will include one as self-occupied. Is that compulsory? No, not required. All three could be vacant also, not an issue. All three properties are vacant. You are residing in a hotel, not a problem. Still, you can get the benefit of two property. That is the part of our numerical topic. Mustafa, we all are not thinking as a student. We are thinking as a tax officer. Yes, you should. Neeraj is asking what is the meaning of vacant? Vacant means without construction, plot of land. Neeraj is also saying, and sir, can we use ITR report for showing annual income? What does that mean, ITR report for showing annual income? Is it related to our topic, what we are discussing? I don't think so. Okay. So this thing deemed let out, this fair rent will come again when we will discuss the numerical topic. Okay. Moving on to the provisions. So these were point number 3, two cases. First one is deemed let out, and second one, all the cases when fair rent will exceed the actual rent. Point number 4, we will discuss at the end of this chapter. This is not connected with the provision we are going to discuss in forward. So at the end of this chapter, we will discuss point number 4. Okay, this is regarding co-owners. So please remind me when we will complete our all numerical topic that regarding point number 4. I will remind myself also, but please do remind me at that time also. Now, cases of deemed owner. So, section 27 it was there, and it was saying that in case of deemed owner, you would be treated as the owner of the property. And what are the meaning of deemed owner? So, you can say the heading suggests cases where property is not registered in assessee's name. Still, he or she will be treated as deemed owner of that property to charge income from house property in his or her hands. So, generally, we are regarded as owner when the registry in our name. Registry means the legal ownership. Registry means the legal title of any immovable property is our name. Just in case of if you buy a mobile, what is the proof that you are the owner of that mobile phone or laptop or that any bike or car? What is the proof that you are the legal owner of that property? In case of any asset you purchase, in anything you purchase, what exactly means that you are the owner of that property? Mustafa is saying if three houses, two are exempt. We cannot say exempt, we call it nil value, not exempt. Exempt would actually change my solution. So that for time being, you should understand the two houses value would be nil. What it will difference with exempt, that you will understand in numerical topic when we will discuss regarding income from house property. Okay, Golty analyst saying, sir, only in municipality area this deeming provision is applicable, like any specification in Act, sir, like only applicable to urban area, not for rural area. It is applicable for all kind of area. The information regarding this would be given in the question. For ownership, we can see we have control over asset. No, it's not the correct answer. Purchase bill, exactly. The invoice. The invoice is the legal proof that we are the owner of any property. We have purchased it, that property. Market rent and pay rent is one. Yes, we can say it's same. We have documents. The document is invoice. If it is invoice in your name, that would mean that you are the owner of that property. So technically, in case of mobile phone, TV, etc., the invoice, and of course, in case of immovable property, that invoice means registry. The registry is the proof that you are the owner of that property. Understand? So if the registry is not your name, still you would be treated owner in some circumstances. Those cases would be called as deemed owner. So in case of deemed owner, the what is the difference? That registry is it not your name, still you will be treated owner for the purpose of Income Tax Act. Correct, Kuldeep? It's invoice. So what are these cases? One by one we will discuss it. The first is deemed owner. Following person are deemed to be the owner for the purpose of income from house property. Theoretical provision. First is transfer to a spouse. In case transfer of house property by an individual to his or her spouse. Suppose if husband is transferring building to wife. Otherwise than for educate consideration. Other than educate consideration. The transferor is deemed to be the owner of the transferred property. What exactly is happening? Suppose Mr. A is having a house and suppose this house has been gifted by Mr. A to Mrs. A. So that means this is without educate consideration. Gift means we did not take consideration. So now registry is in the name of Mrs. A. So Mr. A transfer his house in the name of Mrs. A and he does not take any consideration. So if Mr. A transfer his property to his spouse without adequate consideration, then even the registry is in the name of Mrs. A. But who will be treated as the deemed owner? Mr. A would be treated as deemed owner. And the consideration should be adequate. Suppose the property value is 50 lakh. Mr. A say, okay, I will not gift it to Mrs. A. I will only take 10,000 rupees. I will take the consideration. So if for a property of 50 lakh, you are taking 10,000 rupees consideration. So again, the deemed owner concept would be applicable. Adequate consideration means whatever is the market value of the property, up to that amount of consideration we have to take. If that is less than market value, we will assume it that the deemed owner would be Mr. A. So what the income tax purpose? All the income would be taxed in the hands of Mr. A, not in the hands of Mrs. A, because Mr. A is regarded as deemed owner. So to avoid this provision, either take the adequate consideration. So if you want that Mr. A should not be treated as deemed owner, then we have to take the adequate consideration. Suppose the property value is 50 lakh. So either Mrs. A will pay 50 lakh rupees to Mr. A, then this provision will not be applicable. Or there is one more option. Either take the adequate consideration or take the divorce. If Mrs. A take divorce from Mr. A, then again Mr. A will not be treated as deemed owner. So the concept says either take the consideration or take the divorce. I guess I should write it down like this. That would be easy to understand. That for the purpose of consideration, and that would be adequate. So if Mr. A transfer any property to Mrs. A, either take the consideration or take the divorce, then deemed owner provision will not be applicable. If you did not take the adequate consideration, did not take the divorce, then Mr. A would be regarded as deemed owner. This chart would be better to understand. So for avoidance of this provision, either we have to take the adequate consideration or do we need to take divorce. If any of one thing has been taken, no deemed provision applicable. Mrs. A would be the owner. She needs to pay tax on that property income in future. But if not adequate consideration has been taken, divorce has not been taken, then Mr. A will be treated as deemed owner. Understood? Simple provision theoretically. No, not clubbing. It's called deemed ownership. Clubbing concept is different. That would be a separate chapter. So without consideration, you will be called the deemed owner. So you must be thinking, where is that divorce provision? It has been an exception. So one more choice. In case of transfer to spouse in connection with an agreement to live apart. In short, we called it divorce. The transferor will not be the deemed owner. So if the divorce has been taken, then again the deemed owner concept will not be applicable. Clear? And it is simple. Do not overthink about it. It's very simple concept. If any person transfer any property to his or her spouse, either you need to take the adequate consideration or you need to take a divorce. If any of thing has been taken, no deemed provision applicable. If it is not, then transferor would be regarded as deemed owner. So when he wants to gift a house to his wife, why will he take even 10K also? Because people think that the provision says there should be consideration. But the exact word is not consideration. The word is adequate consideration. So somebody is thinking, okay, if I'll give something without consideration, then deemed provision applicable. So let's take only 50,000, 80,000. So again, that won't help. You will be treated as the deemed owner. It is just for the clarification. Okay. That even some consideration won't help. Goltian Singh, just kidding. Income tax is prompting divorce very well. No, it's not actually the divorce. Let me tell you the concept behind it. That concept actually is the part of clubbing provision, but okay, maybe you're not understanding what exactly and why it is happening. Suppose Mr. A is already business income. Why they'll do so? Already business income, suppose 25 lakh. So he's paying tax on 25 lakh rupees. Now he purchased a house, and this house rental income would be 10 lakh rupees per annum. He's going to let it out this property for 10 lakh rupees. So if this house is in the name of Mr. A, and if he received this rental value of 10 lakh rupees, that is going to be taxed under income from house property. His income already crossed 24 lakh rupees. Now his income would be 35 lakh rupees. Under default tax regime, after 24 lakh, you have to pay 30% under slab rate. So Mr. A need to pay extra 3 lakh rupees on the rent. So to avoid this kind of tax, people start doing this. They transfer property in the name of their spouse. Spouse is a housewife. Her income is nil. So Mr. A think that if I'll transfer this house, if I'll make the registry of this house in the name of Mrs. A, then the rental income of 10 lakh is going to be taxed in the hands of Mrs. A. And up to 12 lakh, there would be rebate of tax. So technically, the tax liability in the hand of Mrs. A would be nil. If I'll receive that rent in my hand, I have to pay 3 lakh rupees. If I'll transfer this property as gift in the hands of Mrs. A, so she needs not to pay anything. So we can save 3 lakh rupees together. So this was a practice earlier. Income tax analyze it. People are doing this. They are transferring their house in the name of a spouse. And the rental income is not going to be taxed because a spouse has no other income. So he or she can take the benefit of exemption. So we are not actually receiving 3 lakh rupees tax by this manipulation. So income tax says, okay, if you want to give to your wife, either take the consideration or either take the divorce. So we can understand the intention of gift. This gift is just to avoid this 3 lakh rupees of tax. So you are actually making loss to the revenue. If you actually intentionally wants to give to your wife, either take divorce, don't take consideration, take divorce. So then the income would be in the hands of Mrs. A. So at least you have to take risk that for saving 3 lakh rupees of tax, you actually have to take divorce or either ask money from it. He will not treat it gift as a transfer. If she'll able to pay 50 lakh rupees, then the income would be taxed in the hands of Mrs. A or take the divorce. So that was the intention of making these provision. The deemed owner concept, what we are discussing. In all cases, this is the intention that people try to avoid tax by registering the property in the name of wife, minor child, you will see. But so income tax just make these provisions to curb, to stop, to restrain, to restrict those kind of tax avoidance practice. Understood now? So income tax is not actually doing any kind of encouragement of for divorce. For some, divorce would be good option than 3 lakhs. So that's not a joke, Mr. Mustafa. It's very difficult thing. So transferee means receiver of property. Yes, transferee means the person who is receiving the property. Chandana, correct. So moving ahead, you got the point of the definition of deemed owner. Income tax say, okay, registered owner is your wife. No worries. We will consider you as a registered owner for the purpose of income tax as deemed owner. If you did not take the money or if you did not take the divorce, you have to pay tax on it. So your manipulation would be not working in this case. Second is transfer to a minor child. The same concept. Now people think, okay, if I transfer to wife, there would be problem. So people start transferring to their minor child. So income tax again make provision for this, almost same provision. Mr. is having a property of suppose 50 lakh rupees. He transferred this property to the minor child. To avoid the tax on that rental income. The intention is to avoid rental tax, etc. There nobody wants to gift without the intention of saving tax. So income tax say if you transfer any property to your minor child without educate consideration. So either take the consideration if minor is earning, suppose minor is a TV star, movie star, etc. So either take the educate consideration. And if there is no consideration, you would be treated as deemed owner of that property. So whatever rent, etc., will arise against that property, you have to pay tax on it. There is an exception, except in case of minor married daughter. So if suppose Mr. A is transferring or gifting a house to a minor married daughter, if gift has been without consideration to any other minor child, minor married son, minor child without marriage, then Mr. A would be the deemed owner. But if the house has been transferred to a minor married daughter, in that case, no deemed owner provision would applicable. Then Mr. A would not be treated as deemed owner. No. But in that case, she will be the owner. The minor married daughter will be the owner. So minor married daughter will remain the owner of that property. But whatever rent will arise, this rental income is going to be clubbed in the hands of Mr. A. So clubbing provision will apply, not income from house property under section 27. So as per clubbing provision under section 64, that would be discussed in clubbing provision later. This is a chapter we will discuss clubbing concept. Section 27 would not be applicable. So Mr. A would not be called deemed owner, but the income whatever would be earned on that property, ultimately it's going to be taxed in the hands of Mr. A, but as per clubbing provision, not as a deemed owner. So if the question asks that Mr. A transfer, suppose the question says, Mr. A transfer a property to his minor child. Would he be a deemed owner? The answer would be yes. Mr. A would be the deemed owner. Suppose Mr. A transfer a property to her minor married son. He would be the deemed owner. Suppose a Mr. A transfer a property to minor married daughter, then the answer would be no. Mr. A will not be the deemed owner, but income of that property will club. So clubbing provision will apply, will club in the hands of Mr. A. So if in the question the property has been transferred to minor married daughter without consideration, then deemed owner concept would not be applicable in that. Understood? That is the second point we have. Mr. Mustafa is saying minor married daughter will never allow cause it is illegal under POSCO. It's not like that. There are some exceptional cases when minor married is legal. Fine, you have to Google it. Income tax say we do not bother about it whether or when minor marriage would be legal or illegal. If it is legal, as per allowed in India in some special cases, if it is legal, then this provision would be applicable. If that is an illegal, then it cannot be said a marriage. So that minor married daughter status would not be applicable. So it would be applicable only if It has been legal in certain cases, and it is legal in certain cases. You need to Google it. Mr. Nagaraja, exactly. You can Google it. Wow, why these type of provision? You can Google it when marriages of minor can be legal. You can go through it, and income tax, as I always say, we do not need to bother about it. We just need to say what is the tax treatment. So if the question says yes, it's transferred to a minor married daughter, then you can say deemed provision would not be applicable. When there would be a legal minor married daughter would exist or not, that is none of our concern. You can Google it. There are some circumstances. Okay. Income tax authority not want to give any differentiation. Even people try anything, it's get taxable at the end after anywhere. Yes, we can say that. नीरज कुमार अलग ही क्वेश्चन पूछ रहे हैं, मतलब माइनर, मतलब अगर माइनर डॉटर के दहेज में हाउस देते हैं तो वो डीम्ड ओनर नहीं होगा. यू कैन से दैट, यस. माइनर डॉटर ही उसकी ओनर मानी जाएगी नीरज, और मिस्टर ए को उसका डीम्ड ओनर नहीं माना जाएगा. बट जो इनकम अराइज होगी उस घर से, वो क्लब हो जाएगी मिस्टर नीरज के हैंड में लेटर ऑन. द सेम thing, but minor daughter will be married. I told you, you can Google it, that when a minor married daughter marriage is legal in our country, you will find out the cases. There are some circumstances. Rental income of that house property will be charged under clubbing provision in the hands of transferor, assuming minor married daughter has not chargeable to income tax. Exactly. So whatever income would arise on that property, Galti, of minor married daughter would be taxed in the hands of Mr. A, but under clubbing provision, not as a deemed owner, but due to the clubbing implication. So point number two was regarding minor married minor child's. Exception is in case of minor married daughter. And in case of minor married daughter, then clubbing provision would be applicable, not deemed owner provision. This is an important note also for you. You can read it, students. The remaining point is holder of impartial estate, member of cooperative society, person in possession of a property, and leased cases. After that, you will see the numerical topic will start. So we are just making a foundation. We are just making the structure on which we have to understand the numerical provision. And let me tell you, you may have some queries, some confusion regarding whatever we have discussed under house property. But when once we will start the income from house property numerical topic, all your confusions will be clear. So just stay with me till that. So I guess now this is the time for a short break. Let me see if there's any query left on the portal. MCQ question asking these type of provisions. So this is not the correct question, Nagaraja. There could be any kind of question regarding any topic. It could be descriptive, it could be MCQ, it could be case scenario, whatever it would be. The main idea is if we know the provisions, if we have gone through with the provision, if we have solved numerical, if we have practiced them, then does not matter what situation, what kind of question would be from that topic. So I don't know, it would be from MCQ, it would be from descriptive, but I know only one thing. If you are prepared for it, it does not matter whether it's an MCQ, whether it's in descriptive, does not matter. You would be able to solve them anywhere. So any more query from anyone? Minor marriage is illegal. Government asks, how can you marry minor child? Google it. There are some tribal areas, there are some castes, there are some cases in which minor marriage is legal in our country. Okay. So you can go through it, you can Google it. There are circumstances. So, Mr. Manish, can we go for a small break? Welcome back, everyone. So I believe you must have your tea, coffee, etc. And let me see if there's any query. Okay. Kuldeep is saying we need to solve the problem as CA from taxation point of view and not just study that very merit of the case. Okay, correct. If he tax under capital gain, again he has to pay tax. If you received adequate consideration, then in case of house property, the person who is receiving that property would be treated as the owner, and deemed owner concept would not be applicable. What would be the consequences in capital gain and income from other sources? That we will see in those chapter. Okay. So moving ahead. So we have discussed the provision of point number 1 and 2, and now point number 3, holder of impartial estate student. This is a theoretical point. You read yourself. Then member of a cooperative society. If you are receiving a house, any immobile property, a building, after becoming a member of a cooperative society on payment of a membership fees, even without registry in your name, still you will be treated as deemed owner. Same in case of holder of impartial estate. If you are a holder of an impartial estate, a property which you cannot sell, you can just a caretaker of that property. Still, you would be treated as deemed owner without even being registered in your name. Fine. Same person in possession of a property. This is for your reading purpose. If you have transferred your property to someone else and only give the possession of that property to that person. Suppose Mr. A. Mr. is having a property and Mr. B wants to buy this property. The property value is suppose 5 crore. But if Mr. B buy this property and do registry in his name, then there would be a problem for Mr. B that he has to pay the stamp duty. Stamp duty would be almost 8 to 10%. So this 5 crore property, 8 to 10%, he has to bear extra. And Mr. A needs to pay capital gain, because when you do the registry, it would be regarded as transfer of property. So what would be the profit on sale of this property? He needs to pay capital gain tax under income tax. So to avoid this thing, Mr. B take the possession of this property. Mr. A gives keys to Mr. B. So Mr. B is having now the possession of this property. And Mr. B pay 5 crore rupees to Mr. A as an advance or deposit. He did not purchase that property. They did not say that we have purchased it. Mr. B just paid 5 crore rupees as deposit to Mr. A, and Mr. A provide the keys, the possession to Mr. B. So there is no technical registry happen. Still registry in the name of Mr. A. But practically what was happening, Mr. B wants to avoid this registry or stamp duty expenditure. And Mr. A wants to avoid this capital gain. So mutually they decided that I will give you the possession, you give me the money. I will say this is not the consideration, this is just a deposit. And you will say I am just in the possession of the property, I am not buying it yet. So we can avoid the stamp duty as well as the capital gain tax. So to stop that practice also, department makes this point number 5. It says, if a person is allowed to take the possession and the other person has take the consideration in a part performance means something needs to be done yet. That means without registry, if one person take the consideration, other take the possession, so income tax say we will consider it as a transfer. Even no registry has been done, we will charge the stamp duty in this case, and he has to pay the capital gain tax. But this point would be in the stamp duty concept, not under income tax, and this point under capital gain chapter. Then why we are discussing it income from house property? because registry even in the name of Mr. A, but we will consider Mr. B as deemed owner. That is the cases we are discussing. Without being registry in your name, when you will be treated as owner, that is the cases of deemed owner. So in this circumstances, even if Mr. B does not have registry in his name, still he will be treated as deemed owner. Understood? Now the sixth and the last case. If you are having right in a property for a period not less than 12 years, you would be called a deemed owner. Suppose Mr. A is having a shop or a building and he leases this shop on rent to Mr. B. He leased this property to Mr. B. So if the lease exceeding 12 years, then Mr. B would be regarded as deemed owner. So technically he is not the owner. But if someone is on lease and having the possession of that property on lease exceeding 12 years, the person who is technically the lessee would be regarded as deemed owner. So it should be at least 12 years or more. A person who acquire any right in or with respect to any building or part thereof by virtue of any transaction as in referred to in section 269 UAF, transfer by way of lease for not less than 12 years shall be deemed to be the owner of that building or part thereof. This is very interesting exception. You might see that in general, the rent agreement is for 11 months, not more than 11 months. If you'll see practically, when two-person make a rent agreement, that would be 11 months because this exception does not applicable in case of renewal of agreement if it is less than 12 years. So suppose I want to give my property on rent to some tenant and I don't want him to be the deemed owner. So I will make an agreement which is less than 12 months. So that would be 11 months. So if the other person who is taking that property on lease and the agreement does not exceeding 12 months or a year, then even after he reside in that property for 20 years or 30 years, he cannot become the deemed owner. So in case the person acquiring any right by way of lease from month to month or for a period not exceeding 1 year, such person will not be the deemed owner. So I don't want anyone to become the deemed owner of my property if it is on rent. So what I will do, I will make an agreement which would be less than 12 months. So that's why practically you will see the rent agreement would be 11 months. So if it is an 11 months agreement, then even after 20 years, the other person cannot be the deemed owner. So this was all theoretical part, what we have discussed. Then the main thing, that is practical provision. And I believe these practical provisions are easy, less complicated, and this will answer your a lot of confusion what you might have with the theoretical concept what we have discussed about. Suppose there would be a question, as we have discussed, that two house properties would have nil value. We have discussed that out of three, two would have nil value, so only one is going to be deemed let out. So there could be a question in your mind, like suppose there is only one house property, and it is let out. Mr. is only having one house property and he let out this property. Then would value nil as a self-occupied or you need to pay tax? There could be a question in mind this also, that suppose I am only having one house property. The ground floor is self-occupied and the first floor is let out. So now what will be the cases? Suppose I am having a house, ground floor for my office purpose, first floor for my self-occupied, this floor is vacant, and one more floor suppose that is also vacant. So two floors are vacant, one is self-occupied and one is for office utilization. So how do we need to solve it? So these kind of question would be clear now in your mind when we will discuss these provision one by one. So just be patient, stay with me. We will discuss each and everything one by one. Yes, it was a very, can say, great practice at that time that take the possession of the property, give the consideration, mutual understanding. You can avoid lakh of rupees of stamp duty of government. You can avoid lakh of rupees of capital gain tax of government by that mutual agreement. So when you see the law is complicated, it is not because government has made that law in that way. Because people actually violate the law or avoid the law by finding these loopholes. So to curb these loopholes, we have to make amendment in law. And that's why it happens. We feel the law is complicated. You know the definition of deemed owner section 27. Initially, it was having one or two point. Then due to this avoidance provision, they have to amend it again and again and again and again and again. If people are not avoiding tax, if they are not going to avoid tax by transferring to spouse, minor child, etc., there was no requirement of section 27 is there. But law actually framed like this always. Fine. So now these are practical provision. The calculation what we need to do, because the format we are seeing, as you have seen the format of salary calculation, multiple things we need to calculate under PGB, under house property. There is very few things we have to calculate over here. You can see it's very, very easy format. First of all, we have to find out the gross annual value. We called it GAV. The gross annual value is technically rent, or you can say expected rent. How to calculate gross annual value? That we will find it out one by one. Okay. Less, we have to reduce it. Municipal tax paid by owner during the previous year. If any municipal taxes has been paid by the owner of that property, that's need to be reduced from the gross annual value. The balance we call net annual value, NAV. So from GAV, if we reduce municipal taxes paid by owner during the previous year, the remaining value would be my NAV, net annual value. Out of this NAV, only two things need to be reduced. First is 30% fixed deduction of NAV. 30% of NAV that is fixed. For repair and maintenance, for insurance of property, etc., government has made a prescribed fixed percentage for all the maintenance expenditure of the property. We will give you a statutory deduction that is 30% of your NAV. Whatever is your NAV, 30% you have to reduce. And the second is interest on capital borrowed, or you can say interest on loan. For this property, for this house, for this building, if you have taken any loan, then you can reduce the interest on that loan from that NAV also. So only two deduction is allowed. One is 30% fixed and second is interest on loan. After this is your answer. That's it. So you can see how easy this is. We just need to find it out GAV, and let me tell you, GAV calculation is also very, very easy. That is fair rent and actual rent, whichever is higher. I have shown you in case of notional income calculation, it is just like that. Municipal tax would be given in question. You have to reduce it. 30% is fixed, so nothing to calculate. If loan has been taken, then we have to reduce interest on loan. And suppose there is a question in which there is no loan has been taken for the property. So it's a good news. If there is no loan, you just need to reduce 30% and then you have your answer in front of you. Now loan would be there, I believe, because that is the only calculation we have to find it out. And there are two loans provisions are there. That is we are going to discuss right now. So you can see the format. We have to find out the gross annual value, municipal taxes paid by owner, net annual value, deduction is 30% fixed, interest on capital borrowed. This is important. There are two interests we have to calculate. we may calculate. First is current year interest. When we need to calculate this current year interest, when loan outstanding during the previous year. Obvious, current year interest matlab previous year 25-26. So we have to calculate the interest on loan which is due in previous year 25-26. When it will be due? When there is loan in this previous year. So when loan outstanding in previous year 25-26, then only we have to calculate the current year interest. Suppose loan has been outstanding for only 4 months. So we have to calculate the interest of 4 months. If loan has been outstanding for the full year, then we have to calculate the interest for full year. So it's just a simple interest calculation on loan. No new concept in current year interest. The B is 1/5 of pre-construction period interest. Now this is pre-construction period interest. So for that purpose, for calculation of 1/5 of pre-construction period interest, we have to find out the pre-construction period. If you are able to find out the pre-construction period, you would be able to find out the pre-construction period interest. And 1/5, that means 20% of it, we can claim as deduction under income from house property. So more or less, I can say only this calculation is just some calculation in my point of view under income from house property. Because current year interest is too easy to solve. Just pre-construction period applicability need to understand and how to calculate. The two things we need to understand in case of pre-construction period, when it would be applicable and how to calculate it. That's it. No other perquisite, no other allowances, no other compensation, no relief concept, nothing is there. So if you compare this format with salary, if you compare the provision with salary, I believe this is not more than 10 to 15% in comparison to the salary provision. This chapter is just to 10 to 15%. Okay. So now for the calculation of interest, in any question, if I want to calculate interest, I need to know 4 things. These 4 things we need to know for the purpose of calculation of interest. So can you tell me what are these 4 components to calculate interest in any question? I need these 4 things to calculate interest in case of any question. Provide me these 4 things and give me a calculator. I can find it out any kind of interest. So in case of house property, can you find it out, or in case of not house property, in any case? Only we needs to know these 4 things. If you know the 4 things, you would be able to calculate the interest. It's very general question. Let me see who can tell me about these 4 things. Again, Galti is asking, pre-construction period interest, how many years can we claim this, sir, for a specific building till absorption of entire pre-construction interest? Why you all are in so hurry? I will discuss it. We did not complete the concept yet, and might be on your screen you can see it has been written computation of pre-construction period interest. So it would be discussed. Whatever we are discussing right now, focus on that. We will discuss each and everything. So my question, kindly answer first that. Galti. Kuldeep is saying principal, interest, time period, repayment, rate of interest. Wow. Then what is the meaning of interest? If the interest has been given, then why do we need to calculate anything? For calculation of interest, what we are required? We need 4 things. Chalo. First is the rate of interest we required. Answer me the 4th thing. Okay? The principal amount we need, the loan amount, and tenure. The what should be the 4th thing we need to know to calculate the interest? Just tell me the 4th thing. I need to know the 4th thing. What should be there to calculate the interest calculation? Ownership, no. Just knowing except these three. Santosh Das is again with the same thing. Great, sir. Have a great day. Thank you. What are the questions we get in examination? I don't know. I don't have any idea. Allowable time. What is that allowable time? Time, duration, I have write it down. The time is means durations. I just need to know the fourth thing. Nobody has given the correct answer. Period of construction complete. No, that means the tenure. Period of loan interest, payment terms. No payment terms. Tax rate. No. The fourth thing we need to know to calculate now realized income from salary is really very easy after studying house property theoretical part. Okay. Type of interest. No. Loan value, interest rate. No. Pre-construction, post-construction. Compound interest, no, not the correct answer. You are not getting what exactly the question is. The problem is this, we are just want to answer it without even thinking that whatever we are answering that is relevant or not. So it is rate of interest, principal amount, tenure, and the fourth thing is always would be applicability. When this interest need to be calculated. If you do not know when pre-construction period is need to calculate, how you will calculate it? So you need to know now that when, like as I've write it down, current year interest, when to calculate? When loan is outstanding in previous year. Suppose I have taken a loan of 10 lakh rupees at the rate of 10% per annum on 1st April 2023. It has been full repaid on 10th October 2024. Full repaid. And now I am asking you to calculate the current year interest in 25-26 previous year. I have given you the loan amount. I have given you the rate of interest. I have given you the tenure. But it does applicable because before this year, the full loan has been repaid. And when the loan has been repaid, why do I need to calculate current year interest? So the applicability you need to know. Okay. Now again in the same question, if I'll ask you that calculate pre-construction period interest. I have the rate of interest, I have the principal, I have the tenure. But until you will know when to calculate pre-construction period interest, when to calculate, how you would be able to calculate. So first of all, you should need to know that what is the applicability. Is there applicability to calculate this interest or not? If there is answer is yes, then we need only three things: rate of interest, principal, and tenure. So applicability of provision, that do I need to calculate interest or not? That is the first criteria. That in this situation, do we need to calculate interest or not? If the answer is yes, then we actually need only three things: rate of interest, principal, and tenure. Understand? So as we can say, in case of current year interest, there would be two interest: current year interest, and second is 1/5 of pre-construction period interest. So I have told you when current year interest need to be calculated when loan outstanding during our previous year. That means 25-26. जितने भी टाइम के लिए आउटस्टैंडिंग होगा. If it be for 4 months outstanding, we have to calculate for 4 months. If it's an 8-month outstanding, we have to calculate for 8 months. Now 1/5 of pre-construction period interest needs to calculate. For the purpose of this, we have to first of all find out pre-construction period. As the name suggests, there would be some pre-construction. So we have to find it out, that pre-construction period, the tenure. And if once you find it out, then you can calculate easily with the help of rate of interest and the amount of loan and the tenure what we are going to find out from pre-construction period. Now for finding out any period, there or universal time, and there would be a end time. So for calculating pre-construction period, there would be a starting date, there would be an end date. If you're able to find out these two dates, we have to find out the interest of this tenure. Fine. The tenure is only important. Starting date would be always loan taken date. The date you will take the loan, starting date would start from here. So starting date, we have find it out very easy. The end date would be obviously loan repayment date. Logically, it should be there. Loan repayment date. And you have to compare it with 31st March preceding completion of house property, whichever is earlier. These two times you have to find out for calculating pre-construction period. If suppose in question loan repayment date not given, in majority of cases loan repayment date would not be given, then automatically this 31st March preceding completion of house property would be our earlier date. So the time period from this till this would be your pre-construction period. For this time duration, you have to calculate the interest, and 1/5 of it needs to be allowed as deduction. Let me give you an example. Suppose the loan amount is given as question is 10 lakh rupees. The interest rate is 10% per annum. Loan taken on 1st April 2023. Loan repayment on 1st November 2025. House completion date has been given in question. Suppose 1st December 2025. Now, with the help of this information, you have to calculate current year interest. And second is 1/5 of pre-construction period interest. So for current year interest, just tell me one thing. That's very easy to calculate. 10 lakh rupees is there, 10% interest is there. You just need to tell me how much would be the current year interest in this case. We are solving it for previous year 25, 26. So as we have discussed, current year interest means the interest for the current year if loan is outstanding. So how much would be the current year interest? Let me see the answer now. And it's again very simple calculation. Current year interest, Radheshyam is paying 1 lakh. So the loan is outstanding for full year, Radheshyam Tiwari? 1 lakh. Very good. Hina is saying 58333. Shamli is saying nothing. Ajay is saying no interest. Beautiful. PV of, why do we need PV of interest? Adil is saying 1 lakh. Very good. Harsh Mishra is saying 58333. Formula to calculate interest. It's a simple interest calculation. What formula you need? Asset value. Okay, 5833 as per Kuldeep. Harivansh is asking for annuity. Not required any annuity. Live class. 41667 for 5 months by Dhanlakshmi. It's a simple calculation of interest, student. What you are doing, what answer you are giving. Calculated yearly, half yearly, or quarterly. If it is 10% per annum, how we calculate a normal interest in that case? Is it that difficult? Some students have given the correct answer. Shamli has given the correct answer. Very good. Navneet has given the correct answer. As I have told you, current year interest means the time loan amount outstanding during current year. So in current year, you will see the loan has been repaid. On 1st November, the loan has been repaid. So in current year, how many months loan has been outstanding? If it has been paid on November 2025, and we have to calculate the current year interest from April 25 till March 26, and loan has been repaid on November 25. So in this year, for how many months the loan amount was outstanding? April, May, June, July, August, September, October. That means from April till October. That is for 7 month interest you need to calculate. That would be 58333. Lot of student has given the wrong answer, and they were asking compounding rate of interest, quarterly, monthly. Array, this is easy. Again, I told you, you have actually done salary provision. That was difficult. So you are expecting something is tricky in everything. No, it's a simple calculation. You just need to calculate interest 10% per annum for 7 months. Suppose if the loan repayment date has not been given, that means loan is still outstanding. Then we can take full year, yani ki 1 lakh rupee would be the current year interest if loan repayment date has not been given. Understand? Chalo, now pre-construction period interest we have to calculate. In front of you there is a formula that we have to, for the purpose of pre-construction period, starting date. What is given in the question? The loan taken on 1st April 2023. That would be my starting date. What would be my end date? The provision says first you have to take the loan repayment date. That would 1st November 2025. Or now second date is according to this 31st March preceding completion of house. So when the house is completed on 1st December 2025. So you have to see the 31st March which must have passed on before completion of house. So if house is completed on 1st December 2025. So just tell me when the March has been come. The last March would be the March before this date. When the March before this date was there, that would be 31st March 2025. Before December, when the last March has arrived on 31st March 25. Out of these two dates, whichever is earlier, 31st March 25. So this till this, there are 2 years. So this 2 year would be called pre-construction period. Now we calculate the interest of pre-construction period. 10 lakh rupees loan, 10% per annum is interest rate. So for 2 year it would be 2 lakh rupees. Simple calculation. It would be 2 lakh rupees for 2 years. And we have to take only 1/5. Government allowed only 1/5 every year as a deduction. So technically 1/5 of 2 lakh, that would be 40,000 rupees. So we can claim this deduction 40,000 rupees each year till 5 years. And you can claim this deduction of pre-construction period interest in the year house has been completed. So because our house has been completed in current year, so we can start from this year. So in next 4 year also, in previous year 26-27, 27-28, 28-29 and 29-30. So this was my first year of claiming deduction. So for next 4 year, we can claim again 40,000 each year. Understood? So that's why we need to calculate interest. You might thinking a lot for calculation, etc. because we have just gone through with salary topic. But you will see we are just calculating normal interest, which must have been you must have been gone through in class 7 or 8 or something. This is that kind of information. Loan amount would be there, interest would be there. You have to calculate current year interest and 1/5 of PPI. That's it. So the theoretical provision has been over here. Find out the pre-construction period, 31st March, immediately prior to the date of completion, date of repayment of loan. Earlier would be your end date of pre-construction period. Starting from date of borrowing. This is starting date and ending on earlier of the following. The deduction of pre-construction period interest will allowed from the completion year. It will start from the year in which house is completed and could be claimed for only next 4 years remaining because it's 1/5. That means 20% per year. Interest on a fresh loan also allow deduction. No deduction of PPI if house is completed on or before 31st March 21. So please remember this date very carefully. If the completion of house is before this date, 31st March 21, if your house has been completed before 31st March 21, then in that question, no PPI need to calculate. No PPI required to be calculated if your house property has been constructed before 31st March 21. This is note for you. This is an example for you. In this example, you have to calculate current year interest and PPI interest for all these three separate cases. In one case, you need to assume that no loan has been repaid. In the second case, you have to assume that loan has been repaid on 1st August 2024. And in the third case, you have to assume that house property completed on 31st March 2026. So I will ask this question. This is kind of your homework. I will ask the solution of this question in our next session. So you would be able to have practice that how to calculate interest calculation. Monisha is earlier saying the answer is 70,000, then said 48,000. Correct, Monisha? Pre-construction 40,000. Absolutely right. So this is whole calculation till now. Now we have just left to solve the house property different cases in different scenario. So the first cases in I have actually divided all house property numericals from case number A to case number G. Total 7 cases would be there. Let me tell you, these cases has not been mentioned in the act or anywhere in your study material. These cases means there could be 7 kind of questions in your house property. So I have divided all kind of questions according to the cases. So in the examination, you will able to understand when there is a question, you can imagine and you can think, okay, this question need to be solved as per that provision or as per that case. So you will not get confused because in a house property, there would be cases like if you are staying in a house, it is also let out that ground floor, first floor cases. So you won't be confused. I will tell you that total 7 kind of cases or question, different 7 case kind of question could be framed. And once you find out which case is applicable, then you would be crystal clear that how to solve that exact case or that specific questions. So you would not get confused. You will not make any mistake. What are the first case? Let me show you. Navneet is saying if construction complete on 31st March 26, in this case, PPI period is up to 31st March 25. Yes, I have written that in the list note also. Aditya is saying how 58333. Wow, Aditya, we have just discussed it. 10 lakh rupees, 10%, 7-month interest we have to calculate. That's it. Neeraj, okay. Very good. 58333. Well done. So I guess you all know how to calculate current year interest and PPI. I can't get the end concept, sir. The earlier date. We have already made the chart for it. Of course, this is, you can find it out, find out pre-construction period. And this note number 5, you can go through, Ishwarya, you will understand what is that earlier date means. Simple things, you just need to go through once, you will understand. Shraddha is saying, sir, not clear with the calculation of 58333. Oh my God. 10 lakh rupees loan, 10% rate of interest. It has been repaid in 1st of November, I guess. So 7 months from April till it was being paid on which date? Repayment was, I guess, on December. So April, May, June, July, August, September, October. On 1st November, it has been repaid. So for 7 months, we have to do now. So that would be 58333. Okay, Shraddha. Pooja is okay. Pooja also got the correct answer. Yes, Navneet, it means always take before 31st March. Whatever the date of completion, you just need to find out the preceding 31st March. Very simple interest calculation. I am telling you, there is nothing new I am teaching you. This interest calculation you must have gone through in your class 6th or 7th or 8th, and you must be calculating interest in under like partnership firm interest or accounting every year. So this is normal simple calculation of interest. I am not teaching you anything new in this topic at least. Chalo. So different cases to solve income from house property. So these are 7 cases. One by one, we will discuss all these cases, and let me tell you, first and second, the first A and B cases is here. Case number A and B is having the same calculation. So total case is A, B, C, D, E, F, G. So you might be thinking, oh God, we have to understand 7 kind of questions. So let me give you a relaxation. A and B solution is same. C does not have any solution. C is a general case, no numerical from C. D and E is having the same solution. D, E, and technically G. They all having same solution. Exactly, copy paste, no difference. So if you see, this is one case. These 3 is having 2 kind of solution. D, E, and G is having same. This is the most important case, case number F. So total 3 kinds of question would be there. It's not 7. Cases are 7, but the solution pattern is only 3 kind of solution pattern. Whether it's going to be solved as A and B, or it would be solved as D, E, G, same solution pattern. F is having a separate solution pattern. So out of these 7, C to is not exactly case of solution. It just needs to guide you something. So technically only 3 kind of solution we have to see. First one, second one, and third is F. The first one, A or B, is saying when you have self-occupied or vacant property, and that is maximum 2. Because if it is more than 2, it would be deemed let out. So if any assessee is having 2 self-occupied property or 2 vacant property or 1 self-occupied or 1 vacant property, whatever is the permutation combination does not matter. The thing is, those maximum 2 property, if it is having 1 property, okay, so maximum 2 property if it is for self-occupied or vacant, not let out. Whether it's self-occupied, vacant does not matter. Both self-occupied, both vacant, or 1 self-occupied, 1 vacant. The treatment would be as per same A or B. And the solution treatment you can see and you will be very happy. What was the numerical pattern? GAV minus municipal tax is AV. So in A or B, there is no requirement of calculation of GAV or municipal tax. You have to start your question as per AV, and annual value would be nil always, fixed rule. We have told you na, that 2 house property is having exemption, but we will not take or call it as an exemption. We will call it the annual value of the format would be nil directly. So if there is a question that Mr. A is having 2 self-occupied property, 2 let out or 2 vacant property, or 1 self-occupied, 1 vacant. solve it. So we can write it down annual value nil. And if annual value nil, you can recall the format. The 30% deduction of annual value would automatically be not applicable. Because if this is nil, this 30% would automatically be nil. Nothing to do in this. So only one thing you can claim as a reduction, and that is interest. And the first one would be, we have to calculate the current year interest and then 1/5 of PPI. So this interest you can claim as a deduction and that will result in loss. These deduction would be maximum of total of these current year interest and 1/5 of PPI. The maximum we can claim 30,000 in a case, or it could be 2 lakh rupees maximum. In some case, you can claim only maximum 30,000 with the aggregate of current year and 1/5 of PPI. Or this 30,000 could be up to 2 lakh rupees if these two conditions fulfill. If these two conditions is not fulfilled, you can only claim maximum 30,000 interest. But if these two conditions fulfill, you can claim this up to 2 lakh rupees. The condition number 1, the loan taken on or after 1st April 1999. First condition. The loan must have taken on or after 1st April 1999. And both should be fulfilled. That's why it has been and, not or. Construction completed within 5 years from end of financial year, loan taken. Suppose loan taken has been given in question on 10th July 2012. So first condition has been fulfilled. Loan has taken on or after 1st April 1999. But second condition says the construction should completed within 5 years from the end of the financial year loan taken. From the end of the financial year loan taken. So we have taken loan on 10th July 2012. So we have to first go into the end of this financial year. When this financial year will end on 31st March 13. Now add 5 years in this. So that means if house is completed up to 31st March 18, then you can claim maximum deduction of 2 lakh rupees. Otherwise, it would be 30,000. Suppose the current year interest is 40,000 rupees and 1/5 of PPI is 1,80,000. Suppose. So if these both condition does not fulfill, then you can only claim 30,000 out of this 2,20,000. Total is 220. You can only claim 30,000. If both conditions fulfill, then out of 220, you can claim 2 lakh rupees deduction of interest. So technically, in case number A and B, you can see there is no calculation except the calculation of interest. And this interest deduction will create always loss. There could not be any profit in case or B anyway. It would be always either if there is no loan, the answer would remain nil. Suppose case A and B has been given in the question. And the question says no loan has been taken. So what would the answer? Nil. It will take not more than 20 seconds. Your answer would be nil. Only there would be calculation if loan has been given. So if there would be loan, there would always be a loss. And this loan benefit under case A and B is allowed only under optional tax regime. If it's a default regime question, then in case of self-occupied and vacant property, no interest deduction. Not current year, not PPI. So it's a good news. If the question belongs to default tax regime, then A and B answer would always be nil. You do not need to do anything. If it's a default tax regime, you do not need to calculate interest or PPI interest. So we should pray that in case of house property, if it is of self-occupied, there would be question for default tax regime. But I believe it won't be happen because examiner will give you definitely as per optional tax regime to check whether you know the provision or not. So this is A and B. Navneet is asking if we reside in one house property and second house property is under construction for that loan is taken, can we claim interest of second house property if income from salary? No. Until your house property would be completed, you cannot calculate income under the head house property. Under construction property would not be regarded as house or building until it has been completed. That's why when it would be completed, then the interest portion of that pre-construction time period you can claim. Why this 1/5 of pre-construction period has been given? Because once you start constructing property, it will take 2, 3, 4 years. So during that period, you are paying interest to the bank, but you cannot claim the deduction because your property is under construction. So when it will be completed, for that 3 or 4 year of interest, whatever you have paid during the construction time, you can claim it like this pre-construction period interest. That's why pre-construction period interest has been introduced. Yes, exactly. नीरज is absolutely understood. सिंपल है लेकिन क्योंकि एकदम सैलरी से डिफरेंट कंसेप्ट आप पढ़ रहे हो। अभी तक क्या था कि सैलरी वाला सब कुछ था कि ऐसे टैक्सेबल निकालना है। दिस इज वेरी सिंपल। बट बिकॉज सैलरी वाला अभी हमारे दिमाग से कंसेप्ट निकला नहीं है, हम एक न्यू तरह का प्रोविजन समझ रहे हैं, बिल्कुल न्यू टाइप का। ऐसा मिलता जुलता कुछ भी सैलरी में नहीं था, तो वो ऐसा लग रहा है ये हो क्या रहा है। बट लेट मी टेल यू, all house property question can be solved in calculator within a minute or two. Once you will get all the provisions concept understandable, then you would be able to solve it in a minute on a calculator. Not in the examination, of course, you have to write it down. Under 105 BAC, you cannot claim any interest of current year or PPI in case of self-occupied. 30% in both regime. Yes, Adil. Only the interest portion provision is different. Everything else is allowed same. Interest deduction is applicable to both regime, not in case of self-occupied property. A or B case, not allowed in case of default tax regime. Prajapati, okay? Loan should be taken on or before 1/4/1999. So if loan has been taken 1/4 before 1999, deduction would be only 30,000 rupees. 2 lakh rupees benefit you cannot claim, Navneet. So I have given you a single illustration for homework, and this is our case number A and B in detail. You can say annual value of maximum two houses can be nil, self-occupied or unoccupied. That means vacant. How do we need to solve it? Nil, 30% deduction. Interest deduction, you can claim 30,000 or 2 lakh for both houses in aggregate under optional tax regime only. Maximum loss can be 2 lakh rupees under this case. The theoretical part, everything has been written down. So this is your homework. Kindly read down these provision. The condition of 2,30,000 has been given over here. So till over here, you have to revise the provision. So in the next session, we will complete all the cases and then pass to your question, some illustration also, and some test your knowledge question also. So is it any query over here? Okay, let me see. There is no query. Well done. Anyone else? Any query? So today we have actually crossed the limit. It's already 9:45. So story would be in next session, student, because it will consume your more time. So we will discuss a beautiful story in the next class. Today is for theory of Pluto is your story. So you can go and search on Google and you can understand that's exactly not a quotation. That's kind of a story. So please go through it and you will enjoy the story or theory of Pluto. That would be always be like a Pluto. So it will nothing should affect your goal or your focus. Let me see if there is any query. Thank you. Welcome. Saying thank you. Bye, sir. Bye bye. Welcome. ओके सर, धन्यवाद आपका भी बहुत बहुत धन्यवाद जो भी है. श्रद्धा इज सेइंग थैंक यू श्रद्धा. एनी मोर क्वेरी? पूजा इज सेइंग थैंक यू वेलकम पूजा. Saipa, welcome. Three more. Okay, Radheshyam, welcome. And Lakshmi, welcome. Adil, welcome. Bye. Aditya, welcome. Bye. Shwarya, good day. Good day to you too. Ajay, thank you. I guess there is no more query left. So, Manishi, we can close the session. Yes, it's done. Thank you, Manishi.